Hello friends, welcome to the class of Cost and Works Accounting. This is a disclaimer statement of this particular video. Now learning objective. In last video, we have covered the first learning objective, that is to understand the meaning of cost accounting. Now in this video, we are going to see the second objective, that is to know the limitations of financial accounting. In last lecture, we saw the financial accounting. Basically, financial accounting's main objective is to present true and fair view of the business, show the business income and the financial position of the organization at regular intervals. Okay, but in modern business today, as you all know, there is a cutthroat competition in the market. If you wanted to survive in the market, then you need to adjust according to the market demand. Nowadays, every person wants good quality product at cheaper rates. So to achieve that objective, certain data is required for the company or to the management, and financial accounting is not in a position to provide that particular data. So such data can be generated through the cost accounting. So the limitations of financial accounting has given the birth of cost accounting. So let us see the limitations of financial accounting. First, it shows overall performance. If you remember, then we prepare our financial statements in financial accounting at the end of the year. So naturally, we comes to know at the year end what we have achieved. Have we gained something from the business, or we have incurred some loss? So this financial accounting shows overall performance. Suppose we have, say, 4 lines of product, manufacturing of products. Then the margin of all 4 products may not be the same. But if by watching or by viewing the financial statements of a company, we are not in a position to understand which product has given me more profit, and therefore this financial accounting fails here because it shows overall performance. Next limitation is it provides historical data. So as you all know that after completion of transaction, we record it in our books of accounts. For example, when we deposit a cash in the bank, then only we write bank account debit to cash account. Or whenever we made some sales, that time we pass journal entry cash account debit to sales account. So that is past record, but we cannot write in books of accounts the sales which we are going to make in near future. But sometimes for business organization, some future data is also important. Therefore, this financial accounting, because of its limitation that provides historical data, it is not much helpful for the management in certain situations. Next is financial accounting is static in nature. So static means constant, no change. You can see the picture of that cat. So she is just sitting very static, right? So static in nature, it means that the whatever formats are there in financial accounting, they are not changed according to business. But in case of cost accounting, we can change our formats. In financial accounting, we cannot write debit in the left. As we know that debit side, we keep it on left side, my left side, right? And credit side to the my right side. Okay. But in case of cost accounting, we can change the formats. Whereas in financial accounting, we cannot change the formats. Okay. So this is also one of the limitation of financial accounting. Next limitation is it fails to provide information for price fixation. So this is a very important step in any business organization whenever they wanted to fix the price of a product. So price of a product contains three things. First, that is cost. Second, profit. And third, which is very important once again, that is tax. So if you combine these three things, then only you can get the price of a product. Where if we are talking about tax, it is not in our hand. It is decided by the government. Regarding profit, yes, we can fix the profit. But generally it is fixed on cost. Say 50% of the cost or 70% of the cost. So ultimately, what is important? Cost. Therefore, financial accounting, as we have seen, that it deals in aggregates, right? So it fails to provide information for price fixation. Next, it fails to control cost. So in manufacturing of a product, three things are important. First, material. Second, labor. And third, other expenditure. So whenever we wanted to control cost, that time we need to control these three things. We need to control on material used, we need to control on labor cost, and we need to control on the other expenditure. But in financial accounting, such things are not possible because we deals in aggregate, right? But in cost accounting, we can classify it and we can control it. Okay. Next, no proper classification of cost. So in case of financial accounting, whenever we incur some expenditure, we write journal entry. For example, we paid wages for manufacturing a particular unit to particular person. So what we do the entry? Wages account debit to cash account, right? But suppose there are four, as we have seen in earlier example, we are producing 4 different products. So the skill used for that production of those 4 products will be different and people are paid differently, right? But whenever we pass entry, we pass same entry, wages account debit to cash account or bank account. So we do not classify in financial accounting. But in case of cost accounting, yes, we do classify. There is a classification of cost that we are going to see in our upcoming videos. Next, it does not provide proper system for performance appraisal. So in financial accounting, there is no such system of developing norms and standards to appraise the efficiency which is we found out or which we use uh, in the use of material, use of labor, or incurring some other expenditure. But in case of cost accounting, yes, we have certain tools and techniques. For example, standard costing, where we set the standards. Okay, so this financial accounting is not helpful for performance appraisal. Next, very important thing, that is, it fails to analyze losses. We comes to know at the end of the year that, oh, we got loss, right? At the end of the year, whenever we prepare financial statements, we comes to know that either we got profit or we incur some loss. Okay, but financial accounting do not provide the information why there is a loss. We can see the profit and loss account. We can see there are certain expenditure, but why? If we wanted to analyze loss, that the answer of this why will not be there with financial accounting. It is with the cost accounting. So we cannot analyze because some idle time, idle plant capacities, inefficient labor, substandard materials, these are the causes of losses. But these things are not possible to analyze in financial accounting. Next, fails to provide adequate information for reports. As we have already seen that management requires data for taking decisions, and in financial accounting we just only prepare one report at the end of the year, that is financial statement, and that is not at all sufficient for the management to take decisions. So this financial accounting is not helpful, or it does not provide adequate information for reports. Next limitation is it fails to provide adequate data to management. Again, it is a continuation of all the previous points, that management requires data. Data comes from reports. Reports are generated through the system, and in financial accounting, such system is not there. So it fails to provide adequate data to the management. Next, possibility of manipulation of financial accounts. So yes, manipulation could be possible in the financial accounting in case of, for example, stock. If we see the stock, if we see the value of closing stock, if you just bring the profit and trading and profit and loss account to your eyes, and we can find out that closing stock is mentioned on the credit side of trading account, right? And what is the principle of valuation? Market price or cost price, whichever is less. So here a person can manipulate the financial accounts by showing the reduced figure of closing stock. That will ultimately affect our gross profit. Then it also affects on the net profit. If net profit is less, there are some benefits that you have to pay reduced tax. Right? Reduced tax liability will be there. Okay, so this is possible in case of financial accounting, but in case of cost accounting, it is not possible. Sometimes overvaluation will be there, undervaluation is there, or um, these concepts are there. We are going to see in the upcoming lectures, upcoming videos, over absorption, under absorption. So these things are there in cost accounting and not in financial accounting. Uh, we can check the accuracy of financial accounts. Next, it does not use of control techniques. So in cost accounting, we have budgetary control system. We prepare budget. So that thing is there in cost accounting. But what about financial accounting? We do not provide or we do not prepare any budget in case of financial accounting. So there is no question of control. There is no question of any technique which helps to control the cost. And last point, it fails to ascertain break even point. So if you see in the figure, I have put the figure, there is one point middle in a blue color, that is the break even point. The red shaded portion is a part of loss, whereas the green portion shows the profit position of the organization. So there is one situation where your total income will be equal to your total expenditures. Okay, so in simple words, we can say that the situation of no profit, no loss. So this is possible in case of cost accounting. We can find it out. But in case of financial accounting, we cannot guarantee or we cannot identify because there are 365 days in a year. Can you tell me that on a particular date, or can you claim that this is the date where I am in a no profit, no loss situation? In financial accounting, I am talking about in financial accounting. No, we cannot. But in case of cost accounting, this could be done by using some methods used in the cost accounting. So I hope you understood the limitations of financial accounting. So this is the disclaimer statement, and whatever images I used over here, this is the image courtesy. There are links given and the copyrights are owned by the respective image maker. Thank you very much.